You're watching Beyond Markets. Welcome. I'm Esther Awoniyi. Many thanks for joining us. On today's show, we'll get some insight into the behavior of African consumers. As always, you can join the conversation with the hashtag Beyond Markets, and you can follow my Twitter handle too. It's at Esther Awoniyi. Now, the managing director of Nielsen Africa, Bryan Sun, says when it comes to whether Sub-Saharan African consumers are feeling more prosperous and how this influences their propensity to purchase, markets are significantly polarized. Now, he joins me to discuss this and share more insight. Bryan, thank you so much. It's a pleasure to have you on the show today.
Thank you for having me.
Quite interesting how, the changing needs of the African consumer and manufacturers and retailers trying to stay, maybe not one step ahead, but at least just to come as close as they can to meeting those needs of the African consumer. Now, we're seeing, according to your report, consumers who are feeling better off and those who are feeling worse off, and of course, the manufacturers trying not to get caught in the middle.
Yeah.
Could you share more insight on how very fragmented this market is and how we're seeing these trends change?
Yeah, so what we have started doing at Nielsen is measuring something that we call prosperity. And that is a combination of whether or not consumers are feeling better off. So we ask them, are you feeling better off than you were 5 years ago? As well as consumer confidence. Because at times your traditional wealth measures can be incomplete when it comes to trying to predict growth in terms of consumer spend. So what we did is we've been asking consumers, are you feeling better off? And what's interesting, as you said, it's very polarizing. Okay. So while the majority of consumers are feeling better off across the region, so in one sense you could say the simple answer is yes, consumers are feeling better off. But like anything, the answer is never as simple as the question, right? So when we dig into the data, what we see is across Kenya, Ghana, and Nigeria, consumers, we also are also on the bottom 10% of feeling better off. So you've got consumers on one end, on the average, feeling better off, higher levels of prosperity than you'll see in some of the wealthier regions, Europe, North America. But then at the other end of the spectrum, you're seeing that consumers are also in those markets are in the bottom 10% of feeling worse off.
So what are those key indicators? What is driving when a consumer says, look, okay, I'm feeling prosperous, I'm feeling better off. What is it that's driving that?
So it's interesting in this market, I think when we look at the Nielsen data, what we see is that only 12% of consumers have spare cash. I think in Nigeria, the number is 60% of Nigerians only have enough to pay for the basics. So what we see in this part of the world, which we don't see in some of the other markets, because of that are two things. One is something that we call the recency effect. People are when you have less disposable income, you're much more impacted by short-term changes, right? So for example, inflation is a big one. The
actual inflation or the perception?
Food inflation versus the perception.
Perception, okay.
So for example, we've seen the numbers. In the last year, food inflation has come down significantly, over 25%. But when we ask the Nigerian consumer, 91% of them say, I still feel that I still feel that food prices are going up.
Okay, so there's that constant expectation that it will go up.
Yeah, when we talk across the region, one of the top concerns of consumers across Kenya, Ghana, Nigeria, when we do our consumer confidence index, is rising food prices. So that is more of a short-term driver that's going to impact people's lives. The other thing that we see is that small changes often have big impacts. So things that you might take for granted in more wealthy nations, things like technology upgrades, connectivity, improvement in infrastructure, actually end up driving much bigger changes to people's feelings of prosperity. And feeling prosperous oftentimes leads to more spend.
But, as also you put in the report, the fact that we've seen a rise in GDP in some Sub-Saharan African markets, that hasn't exactly translated into feeling prosperous, because many times, as you know, we see some countries are touted as, like Ghana, for instance, highest GDP growth so far in the world. Yeah. But when the actual, when you say that the actual macroeconomic indicators on the ground don't exactly point to that, and of course, when you speak to the average consumer, the sentiment is different.
Yeah, I think sometimes, there's a couple factors to that. One is that while we've seen GDP growth across the continent, it hasn't kept up with the global average. No. And we've actually seen that the per capita GDP wealth has dropped, right? But I also think that the reason we're looking at things like prosperity and confidence is that GDP can be an incomplete measure when it comes to understanding wealth or understanding prosperity. GDP has many other factors in it besides consumer spend, things like net export and foreign direct investment, which actually in this part of the world can have a huge impact on your GDP number. And what we're seeing in the short term when we look at things like confidence, when we look at things like prosperity, that actually consumer spend is coming back. And in the short term, consumer spend is outpacing GDP growth in a lot of these markets.
Oh, that's interesting. Now, for the manufacturers themselves, obviously, this is something they have to, sit down and have, a hard look at. I know that for them, at the heart of their business is trying to get closer to the consumer, knowing what they actually want, and also coming up with those products that are tailored to the needs of, both sides of the divide. Now, that's those who are feeling more prosperous and those who are feeling not so prosperous, but still want value for their money.
Yeah. So what we see is in the Nielsen data is that 66% of consumers in this region are willing to try new products, want to try new products. That's quite a high number. But you combine that 66% want to try new products and 12%, only 12% have disposable income. It's an equation that the manufacturers need to figure out. But we're seeing that it's happening. So I'll give you an example. 5 years ago when we would ask, we did a study, we asked all of our clients, all of our manufacturers, what is their main priority? It was always route to market distribution. It was an execution game. Now when you ask them, the number one priority is often consumer insight, understanding their consumer. And the other one that's crept up into the top three is innovation and investing in making sure that they've got the right products for their clients.
Now, how is this going to work out? Because for those, according to your report, for those who are not so well off, they're looking for value. Obviously, they're part of the 66%, and they're eager to try out new products, but they still want value for their money. And like I said, on the other hand, and vice versa. But for the manufacturer, how are they going to achieve this now while making reasonable profits? Because you and I were talking earlier that, I mean, for these manufacturers, for these retailers, at the end of the day, for them also, it's about profits too.
It is. It's like everything, it's about balance. But I would say my advice would be don't be average, right? And I don't mean that. I mean that in the sense of when we look at it, for example, we said on average the African consumer is feeling more prosperous, but in many of the key markets, they're in the bottom 10 about feeling less prosperous. So it's a very polarized market. So if you sit in the middle, you sit and you try to cater to the average consumer. There is no average consumer. So when we talk about consumer insights, we talk about understanding, we talk about data. I think the key is really understanding what is your target market and getting the granularity to understand down beyond a market level, understanding at a channel level, at a segment level, at a geographic level, and really getting the granularity to understand what is your target market. I don't think there's a shortage of opportunity on the continent. I think it's about where are you going to put your priorities. They say strategy is just about making choices.
But where do you see, I mean, given these statistics and what they're pointing to and what they're showing, perhaps also giving some insight into how trends could unfold in the future, in the near future at least, do you see these manufacturers and retailers putting their money where it's going to matter?
Definitely. I see.
Are they willing to spend more on research, analysis?
So it's finding the balance between delivering for today, which is your execution piece, but also investing in the future. It's always the challenge, right? How do you deliver today and secure the future? And as I said, what we're seeing is a lot of manufacturers shifting their spend to more on the innovation side and on the consumer insight side. But if you don't deliver today, you can't deliver tomorrow. The other thing that we're seeing across a lot of our retail index, so the Nielsen retail index, what we're seeing is that a lot of the smaller players we're seeing a lot of the growth being driven by the smaller players, which is a global phenomenon as well. And I think especially in these African markets, it's because they can be faster, more flexible. They don't need to cover the entire market. They have their strongholds, and they drive growth through those strongholds.
It's interesting that you mentioned that, because I was just going to say, I mean, for the small players, how do they keep up? I mean, if you need some, I don't know, I don't know how I know that the research, obviously, when it's sophisticated, I mean, like what you do at Nielsen,
Yeah.
but do they have the capacity, do they have the extra, can they make extra budgetary allowance for that to keep up with the bigger guys?
It's interesting, if you look at the data, so we're seeing across East West Africa, we're seeing probably high single, low double-digit growth in our consumer goods basket. So we're seeing spend coming through. We're seeing high levels of confidence. We're seeing spend coming through. And when we look at where the spend is coming from, so it's coming from non-food, so it's coming from your personal care and your home care categories, but it's coming from your smaller manufacturers. So what we're seeing is the growth is being driven by not the top 10, not the top 30 players, which traditionally drove growth across the continent, but really the growth is being driven by your number 30, 31 through 100 in terms of ranking and size.
Do you see this continue? Do you see them sustaining this lead?
I do. I think they are able to drive a level of agility and local consumer understanding that the bigger multinational players are starting to catch up with.
I was also going to ask, I mean, for the bigger players, what are the strengths that they can leverage on right now to also be at some kind of an advantage?
Yeah, so I think for them, they can leverage their brand strength, right, and their scale and their ability to execute across markets. I think that's important. I think what we're seeing with a lot of small players is they're driving pockets of growth.
Okay.
Yeah.
Now, usually when we talk about the African consumer, what we hear most of the time is, the growing middle class. We always talk about the growing middle class, but obviously, I mean, when one gets down into details like what we're discussing here, it almost sort of paints a different picture. Because we talk about when the growing middle class, that many times also equates or equals to growing income, because sometimes when you see the research, they sort of go hand in hand.
Yeah.
There's a growing middle class, there's wage growth, so they're spending more, and so of course that gives the retailers a good time when it comes to profits, the bottom line, as it were.
Yeah.
But so my question is, I mean, is that still the story? Are we still seeing a growing African middle class?
Absolutely. The growing African middle, I think some of the big...
Do we need to segment them? Do we need to put them into categories?
Yeah, I think we need to understand what that means, growing middle class, because I think we have perceptions of the middle class having lots of disposable income and
but that's
spending
the story.
lots of...
That's the story that we hear, that I hear all the time.
Yeah, but I think we need to understand what it actually means in terms of the disposable income of the middle class. The definition of the middle class is often slightly different than our actual perception of what a middle class looks like. So we're seeing things like the growing middle class, urbanization, but I think if you look across the continent, as we've been saying, you really need to understand what does that mean, what does that consumer look like, and what do they want? Because ultimately, yes, maybe technically they're considered middle class, but I think there's also still budgetary pressure.
Absolutely. Bryan,
Yeah.
We'll take a short break. Thank you so much for your time so far. We'll come back and pick up from where we left off. I've been speaking to Bryan Sun, who's the Managing Director at Nielsen Africa. Okay, so if you're just joining us, Bryan Sun, Managing Director at Nielsen Africa, is with me today, and we're discussing the behavior of African consumers. Bryan, thank you for your time so far. Let's circle back to opportunities that you see ahead, Nielsen sees ahead for some of those retailers and manufacturers. Share some of those recommendations that you see, or rather those opportunities Nielsen sees ahead for these manufacturers.
Yeah, so as we spoke about earlier, I think don't get caught in the middle.
Okay.
Really understand down to a granular level which markets you want to go after, who are the consumers that you want to go after, and really I think what we've seen where a lot of manufacturers have been successful is defining their own segments. There's so much diversity across the region. There's so much fragmentation. You can define your own segment of what you're going after. I think that's important. I think understanding what your consumer wants within the context of a fairly tight or limited basket, and understanding with limited discretionary income, what do they want, what's going to deliver value for them, and then finally delivering on today but innovating for tomorrow. So what does the consumer look like today, but what is the African consumer in the segment that you're targeting going to look like tomorrow?
In the future. Now, we're going to talk about that in a few minutes, but I wanted us to also look at, looking at consumer confidence numbers. What can you tell us? Give us some more insight on that.
Sure. So what we do is we measure consumer confidence at Nielsen. So we look at three main drivers. We look at a number of drivers, but the three main ones are job prospects, the ability or the state of personal finances, and whether or not now is a good time to spend. So those are the three questions those are the three main questions.
Well, that's interesting. I mean, for job prospects, obviously, because here in Africa we talk about, you see across the board high levels of unemployment. On the other hand, like I said earlier, we keep talking about this growing middle class. So what percentage of them actually have jobs or good quality jobs that enables them to have extra discretionary income, etc. But what do you see?
Right. So what we ask them is, how do you feel about your job prospects?
Okay.
So confidence is really a forward-looking view. Because what we're seeing is, if you are confident, generally speaking, if you're confident, you'll spend. It's a very simple thing. The more confident consumers are, the more they spend. The less confident they are, the more they move into savings mode. And so when we look across the key markets in Africa, we're seeing it's a bit of a mixed bag, but what we generally see is that it's stable to improving, which is great. And we're seeing those numbers come through, as I said, high single, low double digit in terms of the consumer goods spending. So what we're seeing, for example, in Nigeria is very high confidence levels.
In the growth of the economy, because I'm also thinking for the consumer themselves, yes, they're looking to have better jobs, or maybe they even have good jobs, but they're also looking at the strength of the economy going forward. What's going to happen to inflation? What's going to happen to the currency? Are there going to be currency fluctuations? How's that going to affect my net worth, etc.?
Yeah, so to what we were saying earlier, oftentimes the traditional measures are incomplete when it comes to consumer spend, right? So that's why we do think we have to look at things like consumer confidence and consumer prosperity. Because what we're seeing in Nigeria, for example, in the Nielsen consumer confidence numbers, is that the Nigerian consumer is very confident at 126. So anything over 100 is confident. We've seen the global average is about 106, is 106. And Nigeria, we've seen a 9-point improvement from the previous quarter. And it's driven by 81% of Nigerians say that their state of personal finances are good or excellent. Job prospects are up, and is now a good time to spend is flat. If we look at Ghana, for example, what we're seeing is that their confidence levels are up, so they are steady, but higher than the global average, is at about 108. And what we're seeing is that there's been an improvement in the state of personal finances, but job prospects are down 5 points. Still high, more than 50%, but down. Kenya, more cautious at this point.
Interesting. Now, but going forward, looking at how this could pan out in the short to medium term. Let's say we see companies becoming more innovative, spending more on innovation, and looking at those brackets, those sectors where they know that they have to do more for the consumer, meeting their needs on both sides of the divide. Do you see significant changes happening, or are you just going to have to wait and see how it pans out? Or do you see signs already that there will be significant changes?
In terms of the spend?
In terms of the spend, and in terms of how the companies, the retailers themselves are responding to the changing needs of the consumers.
Yeah, we've always seen high levels of innovation in Africa, because what we see is that, first of all, innovation is tough. The majority of innovations fail when we look at the data, but those...
Really? Well, that's interesting.
Yeah, if you think about the number of products that come through that aren't successful, it's actually... I think a lot of companies need to invest more in making sure that they've got the right innovations and the right innovation for the right consumer. But what we see in Africa is those companies that invest in innovation for Africa actually end up being very successful. And obviously, we see a lot of entrepreneurial spirit with the retailers and the manufacturers in Africa, and those that invest in their consumers, and those that are able to deliver unique propositions for what their consumers need are able to succeed.
I was just wondering, I thought the way it works is, you're trying out a new product for consumers. Obviously, there's a lot of consumer engagement also, so you try to get as close to the mark as you can, so that when the product comes out, it doesn't feel... I don't know how to do it, but I just thought that was
it is. But I think innovation is hard, right? Because you're trying to understand what people, as we spoke about earlier, it's what people need, but also maybe they don't know they need it.
How often does that happen? Trying to get ahead of the consumer to say, you know what, we probably think that you need this. You don't know it yet, but we probably think that you need this, and we're just going to put that out there.
I don't know.
How much of that do you see happening?
Yeah, I don't know how much of that we see happening. I think what we see a lot of innovation in this part of the world is developing products that meet a unique need in this part of the world. And what we've seen in the past, which doesn't work, is the lift and shift. So this worked in another developing market, it must work in Africa. And we see that that's actually not often the case. Where we see people are successful is they say, okay, there's a unique need in this market, in this segment, in this channel. We're going to develop a product or a service to meet that need, and all of a sudden it becomes wildly successful.
Right. How different is it, I mean, the typical Sub-Saharan African consumer to one in a more developed Western market? I'm asking this question because I know that there's some manufacturer retailers who may be outside of the continent looking into the continent to say, we want to tap this market. I mean, how different could the consumer in, say, Japan or the US be to an African consumer?
I think very different, especially, I think, for one, when it comes to tastes, when it comes to personal care, it's very different, right? If you look at, let's take a category like hair care. The hair care category in Japan is going to be very different than a hair care category in Africa. And I think those that's why you see a lot of success from local manufacturers that understand their consumers, but also from the global manufacturers that are able to take the best from their global scale and whatnot and bring it into the market, but innovate in the market for the local consumer.
But how many new companies do you see are in the African market or trying to making moves, doing research? You say, okay, we want to come into this market as a first timer. What kind of experience do you think that they would have?
We see some, for sure. We see some companies in the Asian continent looking to come into Africa, looking for opportunities. I think it's a big bet, but I don't think there's a huge amount of. So I think one of the things that's very appealing about the continent is as we spoke about the growing middle class, we spoke about people starting to have more disposable income, and you compare that with the fact that a lot of these people have never made real brand choices before. Right? So if you think about that, that's the allure. The allure of the continent is if I can get in, there's not a lot of white, if you look at the globe, you look at a world map, there's not a lot of white space anymore. And when you come to Africa and you look at, okay, there are consumers here that I can get in early on that will have disposable income, and if I invest in the continent now, the allure is if I can get them loyal to my brand, they'll continue to be. People are loyal to brands. If I get them loyal to my brand, they'll continue to be loyal to the brand. So I think that at a macro level is very appealing about the continent. But when you actually come and look at it, and we spoke about diversity and polarization and the fragmentation of the market. Actually, how do you operate here and where you invest? I think that's the question that a lot of these international manufacturers have.
But do you think that this could change in the not too distant future, or it would always be that way?
I think there will be manufacturers that are willing to take that bet, and some that just. I think it's too tough.
We'll pass.
Trust me, we've seen plenty of. In our business, in the consumer packaged goods business, and we've seen plenty of manufacturers that have made big bets in the continent and that have not paid off. And I think the number one driver of where, and it doesn't mean they're no longer in Africa, it just means they've made big bets, made big investments across the region, and they've had to pull it back a little bit, and I think probably the key driver to that is understanding the consumer, understanding the markets. It's not easy to operate in a lot of these markets.
Obviously, I mean, as I've seen so far.
Yeah.
Well, in terms of maybe different sectors that are performing or outperforming other sectors, is that something you also look into?
We look at different categories, and so what we're seeing is that at least in the latest year, a lot of the growth coming through from non-food. And growth coming through from beverage.
Okay.
A lot of the food categories, the growth is a bit behind the total basket, but we are seeing a good growth in the non-food categories. And we're seeing also like pockets of excellence. So for example, one of the things that we said was actually Nigeria has the second fastest growing champagne market outside of France.
Interesting.
So when we talk about polarization, we talk about value for money, we're also talking about opportunities and premium. And the other thing that we're seeing is that in the next 5 years, this region is expected to be the the fastest growing personal care and beauty care in the personal care and beauty care category in the world. So there are, as we said, there are pockets of opportunity, but don't get caught in the middle. You got to find where those pockets are and make your choices and make your investments there.
And of course, those smaller companies, like you said, those smaller retailers will continue. Would you see them sustaining that momentum?
I do, because we're seeing it globally.
Okay.
And it's the ability to be agile and to understand your consumer. We keep saying it, understand your consumer, be flexible, be agile, go where the opportunity is, and to be able to make changes quickly. It's the same phenomenon we're seeing in tech and the same phenomenon we're seeing everywhere. And but that's not an African phenomenon, right? That is the consumer is better connected. The consumer has more choice. The consumer has more information at their fingertips at all times, understands what they want.
So it makes more sense for, as a manufacturer and a retailer, to be consumer-centric, as we say here in Nigeria.
Yeah, always have to be consumer-centric.
Bryan, thank you so much for talking to us today. We appreciate your time on the show. Thank you for your time. I've been speaking to Bryan Sun. He's the Managing Director at Nielsen African. We've been talking about how to better understand the African consumer. But that's it on Beyond Markets. Thank you so much for being a part of it. But remember that you can watch the show at 5 p.m. West African time daily and have access to all previous episodes of the show on our website. That's cnbcafrica.com. You can also stay engaged with the hashtag Beyond Markets. And of course, you can send tweets to my Twitter handle too. It's at Esther Awoniyi. My name is Esther. Bye for now.